Karan, coming to you with regards to where cinema is concerned, right? You've already seen that downtick that has happened. I mean, there's nothing to talk about in terms of how much competition is hurting them. Now, they're still, let's take a PVR, they're still going on that expansion spree in terms of theatres. How do you expect an investor to look at a company like a PVR, because occupancy is low, ad revenues are low? How do you talk about sustenance?
So PVR also has got its own set of concerns from content. I mean, of course, there are two, three reasons here, structural reasons, which are, kind of denting their overall occupancy level. One, I think the kind of variety of content that one has on OTT, this entire thing of, the ease of watching OTT content, the bandwidth speed becoming better, higher broadband penetration, too many OTT platforms, sort of packages being available. I think that is taking away more than 10 to 12% of the footfalls on a permanent basis. So we don't foresee that occupancy levels, on a sustainable basis, could come back to pre-COVID levels. We believe that 10 to 15% of occupancy is a permanent dent because OTT is here to stay, and this entire digital initiatives are also here to stay in terms of better bandwidth speeds. The second issue is on the content side. Now, let's say 15% impact of OTT, let's say, on a sustainable basis, cinema chains should at least operate at 85% of pre-COVID occupancy levels. Now, even that is not happening very clearly because structurally a lot of things have been changed on the content side as well. So in the pre-COVID times, you had people going to cinemas more frequently. You had a lot of medium budget films doing very well in terms of box office. But in the post-COVID era, clearly frequency has come down. People are only going to watch films of large budget in nature if it's worth their time, effort, money. And the risk is highly skewed rather to the larger films. So there are about 15 large Hindi films which are made during the year. Even if 3 or 4 of them don't do well, eventually you could end up at a 20% box office return on a YY basis. That's the kind of stakes large films have. So it's become a more risky proposition as compared to pre-COVID times where everything was very scattered. Content was doing well across budgets, medium, small, large, everything put together. But now you can say 85-90% of the box office in today is coming, from the large budget films. And, medium budget film frequency in terms of them doing well is very, very low. I mean, once in 6 months, once in 8 months, which may not do good to overall occupancy levels. So clearly there are concerns because of these two factors. And I think ad revenue, F&B revenue, all of the things are just a function of occupancy. So unless occupancy doesn't come back on a sustainable basis as compared to pre-COVID levels, you will see concerns on the overall profitability as well.
I mean, Karan, we've spoken about a couple of segments of consumption, which is absolutely pretty mixed as a trend that we've looked at. If an investor has to look at investments in this space, say between food revenue, that's the quick service restaurants, versus your modern trade listed players, right? Or if you talk about cinema players or fashion or the beverage space, where would your bets be? Which segment?
So I think in terms of an overweight stance, we would like to put our bets on the fast fashion segment because this is one segment which is doing very well. I think in terms of both SSG and in terms of store expansion, there is ample opportunity for this segment to penetrate. So, companies like Trend, Zudio are expected to do very well over here. Of course, competitive intensity will increase and, Zudio growth rates, what we've seen in the past of, 45 to 50% may not sustain. They might, see a convergence of growth rates as well because of low
I think we've just...
city.
Right.
But
I think there's some bit of a glitch in terms of the audio as well. But an interesting point that Karan is making is that fast fashion becomes a stop pick. So you talk about the likes of a Trend, which owns Zudio. That becomes important as a stock to watch out for. In fact, that stock has been on an uptrend after the kind of fall it saw post the numbers. But apart from a Zudio, a few of the other names that we should be watching out for, I mean, that's the space.